Tyler Laundon. I'm the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities here with your Cabot Weekly Review. It is Friday, March 28th, and we're coming up on about 12 o'clock Eastern Time. Pretty rough day for the market. So, we're approaching midday. Obviously, the S&P 500 and the S&P 600 Small Cap Index, they're on track to be down about 1% to 1.3% as compared to last Friday's close. So that doesn't sound all that bad like over the course of the week, but as you can see here on the chart of the S&P 500, it's kind of a rough day. NASDAQ is down a little bit worse. It's on track to close down about 2% this week. Next Monday is, of course, the 31st, which will mark the last day of the first quarter. So if things hold where they are now, we'll see the S&P 500 down about 5% in Q1, NASDAQ down about 8%, and small caps will have lost about 10%. So, call it like it is, pretty awful quarter, especially considering how well it all started and what the optimism was out there. The big news, of course, this week is around tariffs. The upside move from the extreme oversold conditions of a few weeks ago. We enjoyed a little bit of that the week before last week and some last week as well. But that kind of faded this week as the market has tried to grapple with the latest tariff uncertainty. It's going to continue to be an issue, at least in the short term. Of course, we've all heard about Trump's executive order yesterday that imposed tariffs on autos and auto parts not produced in the U.S. Those tariffs are supposedly going to go into effect next week on April 2nd. Starting, I think, around 2.5% and ramp up to 25%. I haven't heard of a timeline or really, how that ramp up is going to happen. A couple analysts came out and talked about what that impact could look like. Wedbush said tariffs could push new car prices up by around $5,000 to $10,000. JP Morgan said that translates to near-term car inflation of 9 to 12%. There may be a deduction on interest for car payments, but honestly, taking it all in, as far as I'm concerned, I don't think that tax deduction is really going to mean a whole lot to consumers. The whole argument that you might save a little money by taking out a bigger loan really doesn't hold water with me. You save money by not spending it in the first place and investing it and putting it to work for you. So still a lot of questions about that. The other big question, of course, is how much more can U.S. consumers take? That's kind of what the market is trying to grapple with here. We've already seen auto insurance rates soar in recent years, and so several $1,000s more for a new car is just another financial blow as far as the auto category. Forget about, housing and other categories. So it remains to be seen how auto companies are going to deal with this. Trump has asked them not to raise prices. Again, who knows how that's going to work. This morning, Bloomberg came out with some commentary that while EU officials were told that the bloc would be unable to avoid auto and reciprocal tariffs from the Trump administration, that the European Commission would be working on a term sheet of possible areas of concession. So maybe there's a conversation that's starting. Maybe there's some lowering of tariffs from the EU, some regulatory relief, mutual investments, that kind of thing. Again, short on details. We just don't know. After Trump's announcement yesterday, a few Fed members came out. Of course, they said upside inflation risks have grown. And this morning, the data, the PCE inflation data showed that February was a little bit higher than expected. We also got the March University of Michigan Consumer Sentiment Report. Talked about one-year inflation expectations up a little bit to 5%. That's the highest since November 2022. And five-year inflation expectations up 0.2 percentage points to 4.1%. That's a 32-year high. So, all of this is a long-winded way of saying prices on things expected to go up because of tariffs, which hurts the inflation picture, puts the Fed in a bit of a tricky spot. Although this morning, San Francisco's Fed speaker Daly said 2 rate cuts for 2025 is still maybe a reasonable expectation. Although yesterday we heard from some Fed members saying that, that the tariffs are going to hurt and there's no reason to talk about lowering rates anytime soon. So some conflicting reports there, but everybody is just trying to kind of grapple with these latest developments and the uncertainty, and we'll have to just see how it all shakes out. So as of right now, as you can see, S&P 500 is down. A lot of attention now is moving to next week around the uncertainty about what Trump is going to say on Wednesday, April 2nd, in terms of reciprocal tariffs, as well as the degree to which they may represent firm plans or negotiating tactics. And again, we have the quarter Q1 closing out on Monday. And so there's probably some money managers shifting things around. So not a great way to end the week. In terms of what's going on with the stocks, in the growth realm, things have been very, very tricky lately. We've been pretty defensive in small cap confidential and Cabot early opportunities. Dividend stocks, utilities, a lot of insurance companies, those types of stocks have been doing well. So there are some bright spots out there. It's just, when you step back, it's kind of tricky to try to play and try to trade this market with all the changes and new information and uncertainty that is out there. But let's quickly go through a couple of charts. And I do have a few stocks that have interesting stories that are on the small cap end of the spectrum. Of course, we have the chart of the S&P 600 small cap index here. Looks pretty awful, which is super disappointing given the optimism that led it to break out earlier in the year and at the end of 2025. Here we have the 10-year yield, which is down today after rising earlier in the week. A little bit of relief there, but the market, doesn't really seem to care, at least not today. All right, AXZGN, one of the small cap stocks that featured today, market cap of under 850 million. So, small cap, micro cap, however you want to view it. It is a medtech company. It specializes in surgical solutions for peripheral nerve injuries. The current focus is in trauma and upper extremity related nerve repair, but it's making progress growing into other markets, pain, oral maxillofacial, probably butchered the pronunciation there, and a number of other categories as well. It was recently initiated by Lake Street with a buy recommendation and a price target of 30, which is roughly 60% higher than the price that we see on the screen here, which is about $18.60. Stock has been pretty resilient lately, as you can see. Came off of the sell-off in March. Has a nice move here back above its 50 and 25-day moving average lines. Some of that has to do with the Q4 report, which was good, but also there was a analyst day, and management had a bunch of bullish commentary. So there's one small cap trend stock that has been bucking the trend. Of course, we can move on to gold stocks, which, pretty much have been crushing it lately. Of course, price of gold hitting new highs. Here we have the GDX ETF, which of course is an easy way to play it. But, if you want to get into individual gold stocks, there's a lot out there. I've always liked Alamos Gold, AGI, market cap here of about 11 billion. And then there's Royal Gold, RGLD here. Chart looks great. Some of the smaller players like Perpetua, ticker symbol here is PPTA. This one also has some rare antimony reserves. It hasn't gone into production yet, but they're working on that. This is located in Idaho. And then, of course, you have the more conservative plays like Franco-Nevada and Wheaton Precious Metals, which are gold and silver streaming companies. So kind of a no-brainer lately, although, of course, what happens next is a little bit unknown. But gold price is certainly remaining pretty strong. And last but not least, so relatively boring company here, but that's what's working in this market. This is Primo Brands. Ticker symbol is PRMB. Market cap of about 13 billion. It's a water company. They have a number of hydration brands in the retail market, in club stores, restaurants, hospitality, convenience stores, hospital, schools, offices, home delivery. You've probably seen their big bottles at the Home Depot or Walmart or maybe your local grocery store. They have a direct-to-consumer offering, water exchange, so places where customers can refill. What's interesting here is the Primo Brands recently merged with one of its really large competitors, Blue Triton. So now, in addition to its own brands of Primo Water, Mountain Valley, Crystal Springs, it also owns Poland Spring, Deer Park, Saratoga, and a number of other bottled water brands. So kind of an interesting story, pays a dividend, stable growth profile, and clearly, as you can see, the stock is performing because it is a relatively stable company. So that's going to do it for today. Not a lot of excitement out there. At this point, it's really just continue to be defensive. We're going to learn more next week about Trump's tariff plans, and we will go from there. But we'll always keep you informed and let you know what's going on, and we hope you have a nice weekend. Okay, take care.